Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. Tariffs are back and with a vengeance as the U.S. under President Trump slaps a 17% tariff on Philippine exports. Questions loom large over the country's economic direction. With equities shaky, currencies under pressure, and investors bracing for geopolitical shocks, Filipinos are asking, how do we protect and grow our money now? Today on Follow the Money, we bring in David Angway, a registered financial planner, chartered wealth advisor, and chartered trust estate planner to decode the numbers and help Filipinos understand what to do next with their investments. David, good to see you again, and thank you so much for joining us.
Thank you so much, Raine, for having me. All right.
And welcome back to Follow the Money. Now, of course, you know everything that's been happening so far. How do you see the recent U.S. tariffs, including the 17% Liberation Day tariff on Philippine exports, impacting local equities and fixed income markets?
Well, the US 17% tariff makes Philippine products more expensive in America, which can lower our export earnings. Well, when big companies earn less, their stock prices may go down, and this affects our local stock market. For fixed income markets like bonds, uncertainty often leads investors to demand higher returns, which can also cause bond prices to drop.
Mm-hmm. Now we're looking at some of those graphics there, and it does seem to be pointing downwards. What can investors do to hedge? For example, starting with the peso, how to hedge against peso volatility, as it is seen to hit 58 pesos to the dollar.
Well, to manage the peso up and down, investors can diversify by holding assets in other currencies like US dollar denominated funds. Second, we can also advise our listeners or even our viewers to invest in export-related companies that earn in dollars. And consider hedging tools like foreign currency deposits or ETFs, like the one that you're showing in the screen right now.
Do you see some sectors, so you already singled out like the export-driven, dollar-denominated sectors, earning sectors. Do you see some sectors as having already bucked the downturn? And which sectors might have already fallen or crumbled year to date?
Well, so far, utilities, banking, and consumer staples like the food and essential goods have done okay because they meet everyday needs. For export-driven sectors like economics and garments have underperformed due to lower demand caused by tariffs and global slowdown.
Does this include electronics, perhaps?
Yes, that's correct.
Do you expect the U.S. reciprocal trade policy to dry up or affect our foreign investments in the Philippines?
Yes, because tariffs can make investors nervous. If they think trade with the U.S. will become harder or more expensive, they might look for safer countries to invest in. This could slow down foreign direct investments, which the Philippines needs for jobs and growth.
All right. Well, although some groups believe actually that the Philippines might stand to benefit because other foreign investors are looking at other markets outside of the U.S. For their supplies and services. Now, given the trade war with China on one side, that's the U.S. against China, and then we have maritime tensions also with China, that's on the other side. Do you think that the Philippines could still look to China as a reliable partner in trade and investment, or is this an opportunity to shift gears?
Well, we are actually looking for new trade partners at the end of the day, because with the tensions that's currently right now we're experiencing with China, I believe that there's an opportunity and there's also a risk involved. So I believe that other investors out there might try to look out for some of those opportunities instead of, I believe the government, all right, should at least look for new trade partners rather than relying on US and China. Because when China and the US fight, the global trade slows. And this also affects us because we supply parts to China and also export to the US. It can lower demand for Philippine goods and hurt company profits and make stocks and bonds more unstable. That's what we're experiencing for the past couple of days.
And also for the past couple of days, you've been having a lot of discussion with some of your clients about the uncertainty. Can you share with us some of their sentiments and what kind of options or next actions they're considering?
Well, they can protect their investments by spreading money across local and international assets. Right now, I'm advising everybody to mix stocks, bonds, real estates, and even gold. So rebalancing their portfolio is really important right now. If they do have financial advisors, they can actually do that. Next is avoid putting everything in one country or one sector because if you spread the risk, at least you avoid all those possible losses that you might experience.
Well, we still have a few questions about how to rebalance your portfolio, but we need to pause for a break. Coming up, should you sell your peso now before it slides further? We'll be back with David Angway, RFP, in a quick minute. Stay on BNC and follow the money. Welcome back to Follow the Money. We're still with David Angway, a registered financial planner, chartered wealth advisor, and chartered trust estate planner. David, we were talking about diversifying your portfolio. What is the smartest way to do that in a world of tariffs and tension?
Well, for if you're a new investors, well, I recommend that you stay calm and avoid panic selling. Shift some funds into defensive sectors. And these are my favorite. So food, healthcare, and utilities. Next, keep cash or liquid assets ready to buy when prices drop. And also focus on long-term goals instead of reacting to every news headline. So diversifying your portfolio, I believe that this is the best time for you to revisit it, especially if you're not really focusing on it too much for the last couple of months. So that's how you can protect your funds right now.
All right, and just now we were showing a graphic on your prescribed diversification strategy. Do you still think that this is accurate? We can still follow this at the moment?
Well, honestly, I don't recommend local equities right now because it's running on red for the last 6 months. So I recommend that we put 40 to 50% global equities, then move the other ones directly to bonds. All right. So I believe that the rest of the 10% cash, REITs, gold, cryptocurrencies are good enough. But move away for the meantime with local equities until we meet a little bit stability. So that's exactly how, that's my opinion so far.
How do retail investors tap global equities right now? How are your clients doing that?
Well, my clients are currently subscribing through ETFs, through the feeder fund. It's actually doing pretty well. India is actually running on green, especially with the sectors. And yeah, I believe the feeder funds or ETFs can help our new investors experience a broad exposure to lower risk. And it's an easier way to manage your finances because you're not going to be monitoring it every single day.
I think it's good that you noted to try to avoid panic selling, especially since it can be in a very emotional time when things are uncertain. But this decision fatigue, or especially during turbulent times, are there mindset strategies that you teach your clients?
Well, you need to focus on your core goals. if you want to have it long term, then make sure to never panic, especially at this point in time, because we know that the markets recover. It may take time, but I believe a month from now, 3 months from now, it's like it will still recover. But how long can you sustain the belief that it will create more opportunities for you? That's the main reason why you need to keep cash so that you can buy more dips, right? So it's a mindset if you know exactly your vision. If it's long term, 5 year, 10 year return, or it's gonna be for retirement program, then I believe that this is an opportunity for you to hold even further instead of selling.
What if all this time you've been actually sitting on a pile of cash? Are the lows low enough so that it presents a buying opportunity now, or do we wait a little bit more?
Well, instead of timing the market, be in the market, right? So I believe that right now that we're currently experiencing the low, all right. So the dip, it would be better for you to start investing rather than waiting for the right timing. Okay, so and again, constantly do it like peso cost averaging to avoid decision fatigue. If you do have sufficient funds, like let's say for example, a million or half a million, maybe this is the best time for you to buy while everything is cheap right now.
David, among your high net worth clients, what kind of investment strategies are they exercising right now? Are they hoarding cash, or are they going into private equity, or do you see them investing in real estate?
Um, that's a good question. Actually, it's a mix of both. They love real estate and private equity right now. I'm seeing my clients that they are transitioning from the traditional ones to the elite level of investments. Why? Because there's a lot more opportunities that they can see in the private equity market rather than going with the regular REITs, real estates, or even the condo units that we're currently talking about for the last couple of months now. So they love going with the private equity because it shows that it's not yet well saturated so far.
What kind of growth rates are we supposed to be looking for? We know that, for example, the Pag-ibig Fund MP2 offers, at least 6% growth per annum, which is, respectable, especially since it's tax-free. But what's a good growth rate potential for some of these asset classes?
For let's say for example, for the private equity market, it varies. Especially, I spoke directly with some of my clients that they experience at least 36% growth. Some ETFs that I've also invested in also experienced 24% growth. Again, it varies depending upon the asset class. With especially if you need capital intensive, like the real estates, it will take a lot of time. But for the REITs right now, as we speak, we're also getting year to date at least 4 to 5%. It's not really good so far, but some of my clients are somehow happy instead of negative, right? Because some of their money are currently in the equity market, index funds. It's not moving towards the direction of where it's supposed to be. So I believe that we're going sideways, and it's not that really good at all to invest your money in local equities. Instead, move it away. Probably global equities will be better for you.
David, are we looking at the Fed movements or the BSP movements on the interest rates as potential risk factor or an opportunity considering current market trends?
Well, we are currently looking at that as well. I believe that there's going to be an upcoming news whether there's going to be a rate hike or cutting of the rate by August. But we're still looking forward to that one because if the Fed moves, then we need to keep up directly with the U.S. markets at the end of the day. Because again, investors move their money there for higher returns. This can weaken the peso and force the Philippine Central Bank to raise our own interest rates to keep up. But again, this affects the loans, bond yields, and overall borrowing costs. So we're looking after that one, but it's currently 50-50 so far.
David, we also have the current account deficit eroding peso strength. What might that mean for savers?
Okay, so a current account deficit means we import more than we export. And this weakens the peso, making exports more expensive. For investors, well, this can lead to inflation risk, but it can also benefit exporters and OFW remittance receiving families. And as you can see right now, it's like there's a deficit dilemma. But again, for investors, this can lead to inflation risk. But there are certain things that also we're looking at as a benefit for OFW remittance.
How has your experience been among your OFW clients?
Right now, there are currently tons of questions or inquiries. What should they do at the end of the day? So I kept on telling them that it would be better for them to either keep their peso right now or keep sending money. But again, it's like it's not yet affecting much of the clients that I have right now. So I believe that they are just continuously doing what they normally do so far. So they're not hoarding, but they kept sending all the remittances so far.
Is there a role that gold or crypto or even real estate play now as traditional markets wobble?
Well, so far as we are currently looking at it right now, it's like it's a good process wherein you incorporate that within your portfolio. But again, those are risky, especially the crypto. The gold are when economy is uncertain, definitely hoarding gold is really good strategy. But up to a certain extent, gold is actually doing pretty well right now.
Is it too high already? Are prices too high? We know that it fell for a couple of days, but it's now back above the 3,000 to the ounce level.
Yes, but we are still expecting it for. It's not yet high. I believe that because the forecast might go directly with 3.1 and all. So if you're going to be looking at it, so the more that we experience unstable economy between these trade wars, the more that people buy, or the more the gold actually increases its value at the end of the day.
Well, still a lot to balance and really manage in terms of uncertainty, especially in this trade war. We're still waiting for a lot of pronouncements coming from the BSP and the Fed, as well as the U.S. and Filipino investors. We really need to remain diversified, globally aware, and agile to survive the new era of trade turbulence. David Angway, registered financial planner, chartered wealth advisor, and trust estate planner. Always a pleasure to have you. Thank you so much for sharing your thoughts with us. We appreciate it.
Thank you again, Raine, for having me. All right, I appreciate you guys.
Till the next time. Thank you. And before we go, we'll leave you with this Chinese proverb. When the winds of change blow, some build walls and others build windmills. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.